I watched my industry get flipped completely upside down during the bursting of the dot-com bubble and all of that aftermath. And so this experience made me realize that I was way too dependent, relying on the income from my job, from that paycheck. And that was my only income source. And even though I loved the work I was doing as an engineer, this was always going to be a job full of all of these circumstances completely out of my control. And what it taught me was that no matter how talented of an engineer I was, or how valuable of an employee I was, the bottom line is that if things were not going well financially at the company or in the industry overall, I could quickly lose my job. And so I came to this realization that I needed to start to find other sources of income so I wouldn't be so dependent on the paycheck from my job.
I don't disagree with you. I think it is really prudent for people to realize that passive income is an important factor, because the truth of the matter is, whether you are self-employed, employed by a big company or whatever, there always is going to be changes in your market or whatever. And if you have more than one avenue to make money, then you are better off. Hey guys, and welcome back to another episode of Financial Mastery Simplified. I am your host, Jax Crider. Today we've got Fred here with us, and Fred is an expert, specifically sort of in the passive income space, kind of helping you figure out how to make money without you actually doing the work on the back end yourself, right? So welcome, Fred. Tell us a little bit more about like who you are, what you do, why you're excited to be on the show today.
Yeah, thank you, Jax. It's great to be here. I'll share a little bit about my background. I started out in life having a long and successful career working as a computer engineer in the tech industry. And I spent a lot of time working at different tech companies and startup companies. During the dot-com boom, that was some really exciting times. And I watched my industry get flipped completely upside down during the bursting of the dot-com bubble and all of that aftermath, if you can remember back to that time.
Oh, yeah.
And so this experience made me realize that I was way too dependent, relying on the income from my job, from that paycheck. And that was my only income source. And even though I loved the work I was doing as an engineer, this was always going to be a job full of all of these circumstances completely out of my control. And what it taught me was that no matter how talented of an engineer I was, or how valuable of an employee I was, the bottom line is that if things were not going well financially at the company or in the industry overall, I could quickly lose my job through no fault of my own. And so I came to this realization that I needed to start to find other sources of income so I wouldn't be so dependent on the paycheck from my job. And so this led me to starting to learn about alternative investments, investing in real estate. And then after a number of years, I learned about investing in mortgage notes. And that was the area I've been really focusing on, investing in notes. And a lot of people may not know what is note investing, right? That's always a question I get. And think of it this way. A lot of people invest in real estate, right? In houses, commercial property, vacation property, apartments. But what about when we talk about investing in the paper, which is the notes and mortgages associated with all of those properties? And it's a really interesting part of the real estate business. And I found that a lot of people that are in real estate as investors, or they own rental properties, they don't pay any attention to this. And most people, when they think about a note and a mortgage, they think about being the borrower, but never as being the lender. But with note investing, what we're doing is buying those notes, buying those mortgage notes. And now this allows you to step across the aisle and become the bank. And so effectively what happens is you transition from being the one making the monthly payments to being the one receiving the monthly payments. And so another way I can explain this is that note investing is a way to get involved in real estate, to have real estate exposure in your investment portfolio, but without having all the headaches of owning properties, managing rentals, repairs, all of those things, because effectively you're the lender. And so
Right.
that's what it's all about. And this is the area I focus on. And I think it's a wonderful business. And it's something that is accessible to just about everyone.
That's a very interesting thing. So we actually, and for those of you who are listening who don't know, my main job is mortgage. So I'm not necessarily the investor like what Fred is talking about, but I'm the one who helps place people with
Yes.
different types of investors, right? So like when you're looking for the financing on the loans, and typically it's going to be not necessarily super traditional financing, but it could be very traditional financing, like. And what I mean by traditional, I mean like your regular old 30-year fixed conventional everyday loan, government loans, FHA, VA, USDA, loans like these, right? And then we also deal with non-traditional financing like bank statement loans and all of these kind of things, right? All of these ways. And we actually have a client and we do mortgages for him, like for his personal loans. But he actually does note investing, where he actually purchases properties, and he has a little bit of a dual-edged sword, let's say. So he basically buys properties, fixes them up or whatever, and then places people in these properties in more or less like a rent to own. So he's almost both sides of the transaction, right? He
Okay.
actually like owns the asset, and then he actually also is dealing with the financing of the asset. And um, it's really interesting because you're absolutely right. So first of all, I want to open this conversation by saying that I don't disagree with you. I think it is really prudent for people to realize that passive income is an important factor, because the truth of the matter is, whether you are self-employed, employed by a big company or whatever, there always is going to be changes in your market or whatever. And if you have more than one avenue to make money, right? Then you are better off, because if one
Absolutely.
thing starts, the bottom starts falling out of one, well, then, the other one hopefully is going to be doing better, as far as that goes. So it is a very smart and prudent way of handling things. And what you pick is always going to be the question mark, right? Because there is a lot of choices and a lot of options of how people can make passive income, whether it be a side hustle or, investing in real estate where you're doing like fix and flip. So you're buying properties, you're fixing them, and you're turning right back around and you're making money that way. You're creating rental properties, whatever the case may be. Now, as far as the notes go, what you're dealing with, are you
Mhm.
working and let me back up by saying, let me explain how notes typically operate, like as far as like a big perspective. So from a mortgage perspective, what's happening usually is an investor is gathering together a group of notes, like so a group of different kinds of loans, and then they're being packaged together, they're purchasing the whole thing. And the reason they're doing that is because it brings the risks down, because let's say that some people don't perform, they don't make their payments, right, which we always know is a possibility. Some people are not going to pay. Then that usually the rest of it will pay. I mean, you kind of know what the percentages are, and you know that you're going to be making money. Are you guys joining together as investors and collecting notes this way? Is this the way that you're handling this?
Yeah, there's that's a great question. So there's two ways to get involved in note investing. You can uh, go and as an active investor, go out, find notes to buy, assemble a portfolio, manage that portfolio, and collect the cash flow. That's active. It's very hands on. It's a
Right.
great business. It requires a lot of time to do that. And now,
Right.
if you're someone that doesn't have a lot of time, then you can invest more in the passive approach, where you invest in a note fund, like you described earlier, where the fund managers raise capital and then they'll go out to the secondary market,
Yeah.
buy the notes. They'll have relationships in place. They're buying in bulk quantity.
Correct.
So that means you can negotiate a better discount, and that drives
Correct.
up the rate of return. So a lot of advantages there. And for the investors, they know the portfolio is being managed and they're collecting a steady return every month. It's generating income. And so those are the two approaches. And so when an investor comes to me asking about node investing and how to get involved, this is always the first thing we talk about is, do you want to do passive investing or active? And there's no
Right.
right or wrong answer. It's a very personal conversation that makes sense with your lifestyle, that makes sense with the amount of time you have.
For sure.
Sometimes you might be a busy professional working in your career, very successful, and you don't have a lot of time. Maybe you want to invest out of your retirement account and have it be completely hands off. And so that could be a compelling reason to do passive investing. And so it's always an important topic to start with when
For
you're
sure.
looking at this. Yeah, absolutely.
Well, and it's the thing that's interesting is that for those of you who are listening who are thinking to yourself, why in the world would I want to ever consider being an active investor in mortgage notes? Just so we're clear, quite a few very large, very active hedge funds, which you may actually be a part of in the investment market on the back end, right? Through
Yeah.
401ks and IRAs and stock markets and things like this, actually do this. Okay. Like they actively purchase pools of notes. It became a very big thing back in a little bit before the downfall of 0809, where there was a lot of large hedge funds purchasing. And part of the reason that I'm so aware of this is because I work for a company called Syndex Home Equity. They were in a weird way, they were like the epicenter of why subprime struggled, because I don't know if you know this, fun fact, but that was the company that actually, they were the test case for why Fannie Mae and Freddie Mac started buying subprime loans, because their loans performed super, super well. And they were like the cleanest version of subprime loans.
Hmm.
Okay. So kind of an interesting little fact here, but a really large hedge fund called Fortress Investments, they actually purchased the whole of Syndex Home Equity and actually made it Nation Star, which then became Mr. Cooper, which I now think they may have gone through another buyout. I don't remember. That's a thing that happens all of the time. But so a lot of people, I think they believe that potentially investing in things like that are risky. The thing that I'm going to tell you when it comes to any investing you're doing, it does not matter what it is, there is risk.
Yeah,
Staying at your job has risk, right? Because to
absolutely.
exactly Fred's point, you are in a job, all of a sudden something turns your market on its head. And
Yep.
now jobs start going away, right? They don't need you for this purpose. A new company buys that company out or whatever. You know what I mean? In fact, we were having this very interesting conversation literally last night at Mahjong, where somebody asked this lady at our table what she did. And she said that she was like an oncology nurse, but now what she does is like her job was to like figure out the patient relationship, like as they're going through the different channels of like what they need to deal with when they have cancer. And she said that this large hedge fund had bought out the particular hospital that she works for, and now it's all about productivity and how do you get everything to work just so. And she was kind of frustrated with this, and I wanted to say, well, yeah, because they're looking at it from a very dollars and cents standpoint, right? Because now a new company has taken into the mix.
Yeah, that's definitely interesting and so true. I saw it all the time working at different companies, different environments. There's mergers that come in, or the whole management team gets replaced and it just changes, or the product you've been working on for the last 5 years gets sold off to another company, and now things change drastically, totally out of your control. What about just life circumstances? What if you have to take step away from your job because of an illness or injury,
Right.
or of yourself or of a loved one? Sometimes that's what happens, and this is the compelling reason to generate other sources of income that are going to continue to work for you, even if you're not working, right? It's all about the concept taught in the book, The Richest Man in Babylon, which the whole underlying theme in the story is get your money together and then have it working for you. Right.
Correct.
And so I liken it to the idea of your money can be, each of your dollars can be one of your employees out there in the world working on your behalf. And if you've done your job well, you'll send them out. And then at a future time, they'll come back. And if you've done your job well, they'll bring friends with them. And that's the whole analogy. That's what you want to be setting up. And so this is always the case for generating passive income. I read a statistic recently that the average millionaire has 7 different streams of income. And if you're out there listening to this podcast thinking, wow, I just have one, right? And so think about, what would it be like to add a second one? Start from where you are, add one more, have it be
Right.
something that's totally not related to the work you do. And so this is what's going to build up financial resilience for yourself and for your family. And that can be very powerful when it comes to changing your mindset, changing your approach to financial decisions and how you think and feel about your money.
Well, and I love what you just said, because I was about to bring it up, and about the mindset piece, because I think this is where we get really, really lost. And it's something that we talk about a lot on this podcast is we struggle big time with mindset. And a lot of this has to do with the way that, I call America consumer nation. And it is basically, you've been taught and have been held in a mentality to be a consumer, and how you can consume and the ways in which you can consume. And there's nothing inherently wrong with being a consumer, right? Like you do need to consume at a certain level, right?
Yeah.
And our economy depends on it. We all have to consume.
We all
However,
need goods and services. Yeah.
exactly. But we also have to step back. We also have to pull back and be asking ourselves exactly what you were saying, right? Like, how do we try to make money for us, right? Like, how do we able to live the lives that we want to live or whatever? And a lot of us, unfortunately, fall into this trap where it's like, okay, so first we go to school. Okay, we go to school, we get out. Then we go to college. Okay, we go to college, we get out. Then we get the job. We get the job, and then we just are just trying to, a next job, kind of just level up this way. When in reality, you're absolutely right. Almost every single person who has found super great financial success, if you're talking about on a lots of dollars and cents, I don't mean financial mastery, which could be you have very little money, but you feel really successful and like you've mastered yourself because you're good with where you're at. I mean, if you're talking about people who amass a lot of money, you're right. Most of them have a lot of streams of income. Like, I can use my uncle as an example. Very, very sharp guy, solved a problem, worked a regular job while he started a company. And then I think by the time he retired and basically closed the companies down, he had something like 20 something companies or whatever.
Wow.
Now, I don't necessarily suggest that somebody go start 20 companies because he's a crazy person and is able to manage a lot or whatever, right? But that was 20 streams of income. Now, for him, those are pretty active streams. Some of them maybe not as much, but why do you think he reached, a heavy level of financial success? Well, because he was basically willing to continue to solve problems or say, okay, let me go out here and, create this stream of income. And I think when we only are putting our lens in a consumer mindset and basically kind of what we've been programmed to do, which is, go to schools and then get a job and then just sit in job, work at set job until we retire, we haven't framed up the mindset of, okay, what do I even want to do? And how much money do I need to have to make that make sense for me, right? Like, to make that lifestyle work. And then, how do I add some additional income in here, right? So that I maybe, if this one falls out, that this one still exists. And like you said, start with one and then layer on. And
Yeah,
even
it's
myself,
a process over time.
even myself, I'm not necessarily always done the best job at this, and it's because I get in a very consumer headspace. And it's a really important thing that has to be addressed in order to reach, in my opinion, a level of financial mastery of what you're looking for.
Yeah, I'll tell you something that my experience over time was that as I was getting more and more involved in alternative investments and adding different investments and cash flow, and I was continuing my work as an engineer. But what happened was over time, the investments, they were growing and expanding, right? Because you do a new investment, a new project, and it just keeps layering on, as you said, right? And so what happened was over time, I eventually got to a point one day where I realized that the income from my investments was now enough to cover my bare bones basic living expenses. It got to that level. And then I realized, wow, from this point forward, now I'm going to continue working, but now it's because I want to and not because I have to. And that was a huge shift for me. And it totally changes the way you look at things and your tolerance level and your mindset. It was huge. And so that's something that I'm very passionate about. And I always share that because I want to inspire as many people as possible to really think about that, because it is not about how much money you accumulate. And it's more about how long could you live if you couldn't work anymore tomorrow? How long would you be okay? For some people, it's a month. For some people, it's 2 years. And for others, it could be indefinitely.
Yep. No, it is so important, and you're absolutely right. And that is, there is something that definitely shifts right inside of you when you've kind of realized that, like, oh, okay, I get to do this because I want to do it, not because I have to do it any longer. And I think this is, again, where intentionality comes in, because here's the reality. There is sometimes that we are working jobs we don't love for a period of time because it's what is going to put food on the table and pay the bills, make sure we have a roof over our head or whatever, right? But this is where I talk to people about, kind of choose their hard. And, and know that sometimes when you are starting out, like, let's say that one of your first forms that you're trying to create of another income stream, and this one is not passive, obviously, but like is like a side hustle, right? And some of those are going to work out amazing, and some of those aren't, right? Like always the people on social media make it look so easy, the dollars are just going to be rolling on in there. As somebody who does make some money from social media, let me just tell you something. It is not as easy as it looks, and you have to be consistent as hell to really make like a lot of money off of social media. And so, a lot of times, but you have to continue to start putting yourself out there because you know where you're trying to go. This is the end game, right? I would like to be able to do whatever I'm doing because I want to do it. Or if I hate it, let's say I just hate it. I don't like it. I'm going to replace that income as quickly as I possibly can. So then I can go do whatever thing B is, whatever the dream of that looks
whatever
like,
you're
right?
passionate about. Exactly. Your purpose.
Stay tuned. We'll be back right after this message from our sponsors.
Welcome to Financial Mastery Simplified, your go-to podcast for making smart money decisions. We break down complex financial topics into easy-to-understand advice you can use every day. Our experts cover everything from budgeting and saving to investing and retirement planning. We give you the tools to take control of your money and build the future you want. With Financial Mastery Simplified, you'll feel informed and empowered to make the best choices for your financial health. Tune in to Financial Mastery Simplified on your favorite podcast platform. Start your journey to financial confidence today.
Visit us at fms.tips and fms.college for more information.
Welcome to House U, where we believe in the power of education. At House U, we're more than just a brand. We're your partner in home ownership, dedicated to educating, equipping, and empowering you every step of the way. Education is at the heart of everything we do. We offer comprehensive resources designed to make home ownership simple and accessible for all. From understanding mortgage options to mastering home maintenance, HouseU provides the knowledge you need to make informed decisions with confidence. We host workshops and seminars, bringing together experts and community members to share insights and build a stronger, more informed community. Because when you're educated, you're empowered. HouseU, home ownership made simple for all. Visit our website or contact us today to start your journey with HouseU. Empower yourself with knowledge and embrace the joy of home ownership.
Thanks for your patience. Now back to our conversation.
That is so important, is finding what is your purpose and then aligning that with the work you do. And if you're able to bring that together, things change in a major way. You may start a side business and be successful with it monetarily, and then realize, hey, I don't like this. It's not for me. And then
Correct.
you say, okay, well, I'll do something else. Maybe you sell the business to someone else that's going to love it and do really well with it. And that's okay. That's the part of life, the journey and exploring and trying different things. You never know until you walked a mile in those shoes, whether it's right for you or not. And so that I love that you brought that up, that whole idea of alignment and purpose, because I think it's something that is very worthwhile to spend time thinking about instead of just going through the motions of life and going in one job after another, where you have spent decades of your life only to look back and say, I'm miserable doing this. I'm getting paid well at this job. I'm successful by anyone else's observations, but I don't like this.
Yep.
Yeah.
Well, I was going to say, that's where Financial Mastery Simplified, that idea came from. Because first of all, everybody has a different idea of what that truly means. For some people, that means, owning a bunch of houses all over the world, right? And they want to go travel there and do all of these amazing things. For some people, that is a very simple life, right? They want to be able to live in maybe like a van, travel all over the United States, have a minimal footprint, right? And be able to just live the life that they want to live. And then everywhere in between. And I think we have shifted the American dream to be some kind of version where it's like a checklist, where it's like, okay, I need to get out of high school and go to college. Okay, check. I need to get a successful, good paying job. Okay, check. I need to get married and, start a family and live in a house, and have 2.5 children and the white picket fence. Okay, check. And there's nothing wrong with any of those things. If that's actually what you want, if you're like, oh yeah, that's what I want, that's amazing. And you can do it in any variation of ways. Fred and I were talking a little bit before the show about that. Hey, that can look like whatever it looks like for you. The problem is that most people have never done an assessment of that. And they've never even thought about, okay, so if I did want to earn passive income, how could I do that? Some people probably know real estate is a way of potentially doing that. But sometimes, to your point, real estate, whether it be mortgage or even on the owning the house side, that's not always that passive. It can be if you have people in place, right, that are like running that piece for you. But it can also be very active. Like you can be the one that the tenant is calling and saying, my water doesn't work, or the hot water heater bust, or the AC's out, or whatever it is, right?
Yeah.
And then there, even myself, and I, like I said, I've been in finances a long time. I have a very good friend, and he is always finding alternative income streams. And very recently, he got a group of people together, and they invested in a storage unit. And they were all pulling money together, and they were buying a storage unit. And so kind of like investing in real estate, but not exactly, because it's a little bit more on the commercial side, very different laws and rules.
Yeah, it's a business with real estate component to it.
Correct. And then you have like people that are actually running that business for you. So it's not like you're the one like sitting behind the thing, like finding, the different storage unit people or whatever the case, you know what I mean? Yeah. And these different things. And so I think a lot of people would be surprised how easy it is to get started, because like in his case, because there were a bunch of people and a bunch of people were pulling money together, the investment wasn't necessarily super huge. Like, it wasn't like you had to have 300 or 400 grand to be able to like push your money into that. And so I know, with you dealing with the notes, is that something that you can get involved with like not a huge amount of capital investment?
Yeah, it is. There's all types of configurations, and notes are small. There's large ones. So yeah, absolutely. There's no end to how many different ways that can be done. And yeah, it comes down to the capital you have available and what's your risk tolerance and your timing, your needs for timing.
Yeah, and that's a good point too. And this is something that I will share with people, is that you probably are familiar, if you've ever talked to a financial advisor or planner, and in the concept of risk tolerance, right? What is that? What does that really mean? Well, risk tolerance a lot of times has to do with the feeling that you are like, how comfortable are you with losing the money?
Yeah.
Right? Because nobody wants to lose money. Let's be very real. Like, you're not going into this investment thinking to yourself, well, guess what I'm going to do? I'm going to lose the money. Right? But potentially losing some, if not all, the money is always a factor in play. That is always a potential possibility. And you do have to come into it with that as a possibility, not to scare you or make you not want to do it, but because if you don't understand that and you're banking on this is going to be a sure thing, that is a mistake, and you will set yourself up for failure, because there is no such thing as a sure thing, right? That old saying, the only two things that are certain in life is death and taxes, that's 1,000% true. So if you think that Fred said, oh, hey, invest in mortgage notes, and it's always going to be peachy and rosy and you're going to make tons of money and that's going to be it. Just so we're clear, Fred didn't say that.
Yeah, there are risks with anything, but think about this, and I'm sure yourself and many of you out there can relate to this. What do banks do when it comes to mortgages and lending? Well, how do they manage risk? They make sure that there is a mortgage or deed of trust that's recorded as a lien against the property, right? So now you have security interest, you have the collateral of a house backing that note. They're going to make sure that taxes are paid in a timely manner through setting up escrow. They're going to make sure that you have insurance on the property and that the lender is named in the policy as a loss payee. And so there's a lot of different risks that come up with ways to manage them. And so I agree with you, Jax. Nothing is risk-free 100%. However, we take strategies to mitigate those risks. And this is what helps to take things to the next level. This is how banks and lenders and note funds can scale up a portfolio and have a relatively secure protection against downside risk. I always tell people investing in mortgage notes, it's one of the most unsexy things out there. It's not volatile. It's kind of unexciting.
Mortgage isn't sexy? I'm just kidding.
It's unexciting and it's consistent, I've found. For the most part, it's one of the most consistent things. If the stock market has a huge correction of 30%, well, guess what? People still living in their house. They're still making their mortgage payments every month. They're still paying their rent. There's that level of insulation there. And so those are some of the distinctions. And so I always like to ask people, have you ever thought of adding a component to your investment portfolio that's focused on consistent income generation? And there's not going to be wild swings or huge appreciation, but it's consistent and steady. And when times are tough in the world and in the economy, this is going to keep moving right along. And all the while, you have downside protection.
Yeah. And you're right. I mean, they're, like you said, they're especially on the mortgage side because it is super, super heavy math based. It is super, super heavy risk focus when they actually do it. And this is something to kind of explain from my side on why the risk are a lot mitigated is if any of you guys have ever gone to a mortgage lender like myself, and we had to ask you for about 9,000 pieces of documents. You thought that you were basically giving up your firstborn child, and we were basically asking ridiculous questions. I mean, kind of not really, about like your blood type and your favorite color, what your eyes look like, and all those things. The reason that we do this is because we're vetting out the investment. We're trying to ensure that like what you're actually providing, that we can tick and tie it, and that it matches what we like to call guidelines. And underwriting guidelines are what helps ensure that the risk that the lender is taking on is going to be appropriately stable, that the risk is minimal, right? That we have a pretty good likelihood that you're going to be able to pay. And if for some reason you are higher risk, then that usually ends up being higher interest rate, higher down payment requirements. There's going to be something to offset it, because that's the way that it works. They're working based off of a lot of actuarial tables on the back end. That's a lot of very high level math. They're looking at past and future projections. There's like so much math that is happening on the back end. I'm a little bit of a nerd when it comes to that stuff, and that's why I understand. I'm like probably the only mortgage person you've ever met who used to read some of what the Federal Reserve would put out, just because I was like genuinely and like wanted to understand like how all the back end worked. But yes, and so the other thing that I will say is like when you are coming to passive income streams or investments in general, you can do it. So I'm not saying that if that's your path and that's what you really feel successful at, you can put all your eggs in one basket. But I highly recommend that isn't what you do, right? That you place it out there a little bit. You know what I mean? Like you have a couple of different avenues and streams, because it is going to make your life so much easier and better and a little bit less stressful, because you know that if for some reason the mortgage market had a little bit of a downturn, which there hasn't been a whole lot of those, but if it did, okay, well, there's this other stream over here or whatever, right? And so you just kind of like think that through, think that out. And I think that ends up being a successful path. But I do agree with you, mortgage, more than even just regular real estate, like as far as like buying and selling houses, it is pretty stable because people have to make their house payment if they're going to continue to live there, right? And so most people are going to continue to do that unless they just absolutely can't for some odd reason. There's just no other option out there.
Yeah. Yeah, that's so true. And this is why we can learn so much. Banks are really good at managing risk, and so it helps to understand the reason why they do some of the things they do that require certain requirements. But what I love about note investing, when we buy loans that exist, all of that heavy lifting was done already. The underwriting and the qualifications, and the title insurance to make sure that the lien is going to be recorded in the appropriate lien position, lien priority. And so that's the great thing, because as most of you have experienced, banks and lending institutions create notes, and then usually within 3 to 6 months, they sell them onto the secondary market. And why is that? They recapitalize, and then the very next day, they're originating a new loan for someone else. I mean, that's the whole business model right there. And so for us as investors, it's great to be able to tap into that secondary market and purchase some really good assets that generate income and cash flow for us.
Well, and it part of the reason, though, also that banks end up not holding as much paper as they used to. And what I mean by paper is that investment on the back end is a lot due to some of the legislation and regulation that came out of the 08-09 kind of crisis, because now banks are required to have a lot more liquidity than they ever were before. And so because of that liquidity requirement, they can't afford to hold nearly the amount of mortgage notes on their books as they once were able to, because if they did that, it could create massive issues on their ability to be able to operate as a financial institution like a bank, right? To be able to loan other kinds of money out, to be able to, make money on the comings and goings of accounts and things like this or whatever. And they're obviously not going to put their bread and butter of that on the line just to hold some mortgage notes on their back end books. That's just not a fiscally responsible decision by that banking institution. That just is not going to make a whole lot of sense. And so it's just important for people to remember that no matter what kind of investment that you want to make as far as passive income goes, you should do a little bit of research, right? And see where the risk lies, what the statistics say, because there are some investments that you should take that have a little higher risk tolerance, right? Like if your risk tolerance is a little higher, that you should make occasionally, and then also maybe make some that don't have as much risk, so that we can again sort of balance those things out. But then, like I said, understand that there are going to be people out there who are going to say the opposite of what we just said. They are going to say, "Oh, go all in." And if that's really what you feel like your heart is leading you on, go for it. Just know that is a risk in and of itself, right? Anytime you are kind of placing all your eggs in one basket. And Fred, tell us a little bit as we kind of close, sort of last thoughts. And I know that you do have an offer you'd like to make the audience. So we'll make sure we get that in too.
Thank you. Yeah, absolutely. I have a passive income guide that I want to offer to everyone in the audience as a free gift. You can visit my website, which is fredmoskowitz.com, and you'll see a place where you can request the passive income guide. And if you like a little bit of an easier spelling, I'll help you out. Just go to giftfromfred.com and it'll route you right to my website. So you don't have to worry about spelling my last name. But either way is fine. Go to giftfromfred.com, request the special guide. You'll see a link there. You put your information in, and happy to email that out to you. And I always love connecting with other investors. So please reach out, connect with me. One of the biggest things that I am intentional about is building relationships and networking every single day. And I encourage all of you to do the same, because the relationships that we have in our life is one of the most valuable assets that we can ever have. And no one can take that away from you.
Absolutely. That is such great advice. And I absolutely love that, because I think a lot of people feel like we've got to do this life alone, and you have to have all the answers figured out, and you have to have all of the questions, like the boxes checked. And it's not true. A lot of times you're going to meet somebody or hear a podcast or read a book or something that's going to kind of help fill in the gaps. And those live human interactions are so much more helpful. So especially as we become this kind of maybe disconnected in some ways, because of all the different technology we offer, it has the ability still, though, to connect us as well, right? No different than you and
Absolutely.
I. We probably would have never had the pleasure or the opportunity to connect, to get to kind of network in this different kind of a way without that. So please lean into that. So hopefully this episode was helpful for you to kind of give you some ideas, some thought processes on maybe what other kind of streams of income could I set up, right? Passive, active, bit of both, maybe, to kind of ensure that you are really living up to the potential that you hold and the kind of mastery level you want to look at. So we thank you for watching this episode, and we will see you again next week on another episode of Financial Mastery Simplified.